Hi everyone, welcome back to Corporate Decoder. Ever wonder how exciting a company's yearly meeting can be? Well, let me tell you, this filing is like a soap opera, except with more numbers and less drama. Or is there? Stay tuned, you might be surprised. Today we're diving into TMC, the metals company's annual and special meeting proxy statement. Think of it as a detailed roadmap of what they want to achieve this year, who they want on their team, and whether they can be trusted to follow the rules. It's all in here, and we'll break it down. First off, let's jump into the letter to the shareholders, the big news. The annual meeting is virtual again this year. They say it's to allow more people to attend and save costs. Basically, everyone can attend on the internet. Key items on the agenda include electing directors, picking an accounting firm, and changing the rules about where their office is located. All pretty standard stuff, but important for keeping the company running smoothly. Next up is the notice of the meeting. It's happening in May, and shareholders will vote on a few key proposals. These include setting the number of directors, which is the people on the board, electing those directors, choosing an accounting firm to check their books, and updating some of the company's internal rules. It's like the company's version of an election, but with potentially higher stakes and even longer campaigns. Now let's look at some important things about the annual meeting and voting. You get one vote per share that you own. The board of directors is recommending that we vote for everything. If you don't vote, brokers can vote your shares on some issues, but not for electing directors. So to make your voice heard, you actually have to vote. Who owns the most shares? Let's check out the security ownership. Andre Karkar owns the most shares at around 18%. Allseas Group SA owns about 15%. Then comes the CEO, Gerard Barron. That's not all that surprising. This is all public data that you can verify. The board of directors accepted the recommendation of the Nominating and Corporate Governance Committee and voted to nominate 8 directors for election at the annual meeting for a term of 1 year. Amelia Kinofoy-Saimomua is not up for re-election to our board of directors at the annual meeting, and her term as director will end at the annual meeting. A few of the people are independent. That means they don't work for the company. This is good because it means they can keep an eye on things and make sure everything is fair. They also have committees like the Audit Committee to oversee the audit committees like the Audit Committee to oversee the company's books. Andrew Hall is on the Audit Committee. He actually knows numbers. There are also committees for compensation, nominating new people to the board, and dealing with sustainability and innovation. The board has a lead. Independent directors actually have a say. The board has guidelines to make sure everything is run fairly. Shareholders can send questions to the board in writing. Also, the company has a policy against insider trading. That means not trading stocks when you know private information. And they prohibit hedging, which is like betting against your own company. The company has stock ownership guidelines, and all the non-employee directors and each executive officer covered by the policy met their ownership thresholds. These guidelines require executives to own a certain amount of stock in the company to make sure their interests are aligned with the shareholders. The company has a clawback policy, and in March 2024, the company identified errors in their financial statements and related disclosures. Management concluded that no adjustments to executive compensation were required because no compensation was paid to the executive officers under performance-based compensation awards. Now, let's talk about the money. How much are the executives making? Gerard Barron made around $3.1 million, including salary, bonus, and other compensation. Craig Shesky made around $1.6 million, and Erica Ills made around $1.6 million. That's quite a bit of money. For Gerard Barron, Chief Executive Officer in 2020-24, his salary was $676,042. His bonus was $574. His bonus was $574, $233 Teeth, and for Erica Ills, Chief Strategy Officer in 2024, his salary was $500,000. His bonus was $412,000, and his stocks were worth $7 on 2021. His salary was $500,000. His bonus was $483. Chief Strategy Officer in 2024, his salary was $500,000. His bonus was $7, and stocks were worth $723. Chief Straw Erica Ilv, Chief Strategy Officer in 2024, $400,000. His bonus was $800,000. Her bonus was $447,000. His bonus was I think in 2023 dollars. Chief for Erica Ilv's Chief Strategy Officer in 2020, $24 and $283. It can for $84. Mr. Barron will receive an annual base salary of $750,000. He's also eligible for bonuses. If the company gets bought, the executives get even more money. Sounds like a sweet deal for them. The company has stock compensation plans so they can give stock options. These numbers are very high. You should know this. The non-employee directors got around $200,000 each in fees and stocks. Not bad for attending a few meetings, they get paid quite a bit too. Looking at non-employee directors and their fee, Andrew Hall made $106,236. Sheila Kama $108,000, Al $764, and Andre Karkar $110,000. The board is asking shareholders to vote to allow Ernst & Young to keep being their accountants. The company paid Ernst & Young $777 2024. The audit committee has to pre-approve any work that their accounting firm is doing to make sure the accountants are truly independent. And lastly, the board wants to change the company's internal rules by removing the specific office address from their internal policies. Basically, don't put the address in the rules. It looks as though the company has simply moved to a new building and don't want to need another vote if the address changes again. Now, what's my take on all of this? Well, it's a pretty standard proxy statement. Management wants to keep doing what they're doing, and they're asking shareholders to rubber stamp their decisions. The executive compensation seems high, but that's not unusual for a public company. A lot of people are getting paid handsomely. A risk that is notable is that the company has changed the location of its business, even if only by moving across town. It is important that when an organization changes its central address, customers are properly notified, and any other parties that would be concerned by such actions are notified. I hope this has been helpful for you. Thanks for watching. If you enjoyed, please subscribe, like, and comment.